Hello, Dave Boucher here. What I'm going to show you is a financial model of an acquisition analysis with Visage Technology right here buying Digimarc. I was working for Hunt, and Hunt was then going to buy Visage Technology after they acquired Digimarc, so we're analyzing this transaction itself. Now, the numbers and years have been changed for the purpose of this presentation, but for the most part, they're relatively the same. This first page displays both companies' background information and, with this being a stock transaction, the share price, the number of shares, say shares outstanding, the options, and then there's the balance sheet pro forma out with the actual share price right here. Now, moving over to the pro forma tab, because it's a tab-based model, the on the pro forma acquisition, you see the offer value of 8.56 that Visage was buying the Digimarc from. So the main points of the dilution analysis on this side, if you see, looking at the sensitivity analysis of that, you see the 8.656 put it out to accretion dilution. You get these numbers here as a certain percentage. Now, these numbers here of a certain percentage all come from the EPS calculation. If you look at the net income right here, 5.7, that results down here to these percentages, which result in a break even of 17, 1, and 2.5, which is a little bit inconsistent. Now, with that being said, they also have a balance sheet impact of Visage buying Digimarc. Now, with that, it becomes debt. The debt to book value ratio ends up being 7.2. And I ended up having to do that with a small income statement I've stated before. But with the debt to EBITDA, see, that's a massive income statement, if statement that had to be put together to find the debt, because there's a lot of rationalities. Now, this also, other than those numbers, of the key assumptions that all these data are being read, along with the other page I just showed you, there is also an accretion, a future accretion, dilution, and pro forma based off of different scenarios of stock transaction of 0, 50, and 100% stock transaction on future value years. Now, with that being said, also a comparative analysis was done of the two companies. So basically, the Digimarc over here, I had to put together an income statement summary that found the EPS, and as you can see, there's also a massive income if statement had to be put for the EPS. But point is the EPS for Visage and Digimarc both ended up being going less, but on the financial analysis, they ended up going a little bit less. In other words, Digimarc was only slightly less for its enterprise value of a revenue, while Visage, on it being acquiring that beforehand, it was ended up being a lot. It was going down. The enterprise value was going down at a more rapid pace. The other thing, moving to the contribution analysis, you can see that you're looking at this gross profit. You got revenue, gross profit, EBIT, net income. But the main thing on the gross profit is I want to show is how Digimarc, 77% of that is 40 of the 48 of the pro forma putting them out. In other words, combining them, it's 48.5. So 77% is Digimarc of that 48.5, while Visage is only 22.4 of that total both. But then when you're looking at the equity value of Visage is a lot higher at 63 compared to 36 for Digimarc. And then the enterprise value is 70 compared to 29. And as you can see, it's a little bit of a graph look. Now, moving to the accretion dilution analysis, you see that this is mainly assuming no synergies compared to the other one. Now, on here, you see that at market, there's that 8.56 price per share that was being put out. And this is done, the numbers looking at it at a 100% stock transaction. You see, as you mentioned earlier, 63% for Visage compared to 36. But if you look at the pre-tax break-even synergies, you see that in 100% stock, it's going down from almost 1 all the way to a negative value at a 100% stock transaction. But at a 50% stock transaction, you see that the VSIG at 77% of the stock, of the equity value, you see that it's almost even the whole time for the break-even synergies. There's this pre-tax break-even. So you can go out and draw your conclusions on that too, whether it's a good acquisition or not. Now, moving on, some of the other things that I do all the time to find some of those numbers is I have to create lots of lookup tables and use pivot tables. So, for instance, as the project phase numbers, there's your total amount of labor that was being put in. So say I want to also look at the organization code within that labor analysis. And so if I want to add in the org code, basically, okay, let's just hit OK here. I want to filter out the code. So when I filter out this code, I only want to see, let's say, 2 of them. Those 2 there. Hit OK. Move this magnifying glass over, and there's your org code. Now, say on the org code, I don't like, there's too many of them, so I want to group them. So I click on this to move it to the beginning, and then you see how it's all of a sudden it groups all the values based off phase numbers. And say you don't like that result, or you want to go back to where it is, you just remove it. Now, as I was working for Hunt Investment Group, a lot of transactions that I usually do are collecting data and putting data together for bonds or bond funds or stock funds too, but for this case it's a bond. So what I want to show here is on this intermediate fund, all these numbers and dates have been changed for the purpose of this demonstration, but this kind of was the same, where it's an 8095 par amount at a 6.5 coupon bond. The net amount actually was 8381, but looking down, you see that they sold it for 8095, or the actual net amount is 8402. So, because there's 8095, but the actual net is 8402. So basically, what was happening is they bought it and sold it in the same day because they found out that the interest rate was going to go up, and so they were afraid of the price was going down. So anyways, that's a lot of the fun, and this is basically just a report that has all the funds of all the data that have been put together. And I basically had to create this report because they always wanted to see the grand total amount of that whole month, because that's what this is, all the bond funds, what they made in that month. Now, looking at a little differently, these are a lot of the main holdings broken down. And what happens is because there's so much data that's being brought from different sources, you have to create different reports for the management that has different values. And so all these values, they still need to query, but they don't want to see. So I always have to create a lot of buttons and tabs so they can get them out of their actual report that they want to see for their printing purposes. Now, a couple of things I want to point out here is most all these at the beginning are the treasury funds. And then you get into corporate funds, and you see that the rating of BB and AA of the funds themselves, some of these AAs are financials. And so that's how you can tell what time of the year that I was doing this at. Now, down here at the bottom, there's mortgages. And as you can see, let me go down a little bit faster. As you can see, once I get to the mortgage funds, there ends up being lots and lots of mortgage funds. And so, here, I'll just zoom it to right there. Yeah, here you go. So, basically on the mortgage funds themselves, those were the ones that were broken into several different classes. And you can see mostly 1s and 7s. That plus hits it. Yeah, see there's the 1s. So basically, it's just different ways of categorizing based off of a bond fund duration. Thank you. This concludes this demonstration.